Let's dive into Pi Network, a digital currency initiative that's captured the attention of millions worldwide. It's a project shaking up the crypto world with its unique approach to accessibility and mining. Unlike Bitcoin or Ethereum, which demand significant investment in specialized hardware and consume vast amounts of electricity for mining, Pi offers a radically different model, letting anyone mine coins right from their smartphone without draining your battery. The core goal? To make cryptocurrency accessible to everyone, regardless of their technical expertise or financial resources, aiming for a truly global and inclusive digital economy. The process is incredibly simple, requiring just a daily tap on your phone to remain active and contribute to the network. Instead of relying on energy-hungry proof-of-work mechanisms, Pi innovatively uses a trust-based system, emphasizing security and sustainability. This system operates where users vouch for each other, forming interconnected security circles that collectively validate the network's integrity and trustworthiness. This design means that mining Pi has a minimal impact on your phone's battery life and data usage, making it accessible to a wider audience. Millions of users across the globe have joined the Pi network, drawn by the enticing promise of accumulating tokens for free, simply by engaging with the app daily. These users are hoping that their accumulated Pi tokens will eventually be worth something substantial, transforming their early participation into a valuable asset. But here's the catch, a crucial point to consider before investing too much hope. Currently, Pi tokens have only existed within the confines of the Pi Network app's closed ecosystem, limiting their utility and real-world application. As of now, you can't trade Pi tokens on major cryptocurrency exchanges or readily cash them out for traditional currency, at least not yet. Consequently, the perceived value of Pi tokens is purely speculative, driven by community sentiment and future potential rather than tangible utility. The future value is hinging on the successful and long-awaited Open Mainnet launch, a pivotal moment for the Pi network. This launch is the event that everyone in the Pi community is eagerly waiting for, holding their breath in anticipation of its potential impact. The Open Mainnet would finally connect Pi to the broader cryptocurrency market, enabling trading and potentially assigning the tokens a real-world, market-driven price. Until now, users have essentially been collecting potential value, accumulating digital assets that aren't yet spendable as real-world money. The Pi network community has demonstrated remarkable patience, waiting for years, navigating through various delays, and facing skepticism from outside observers. All this time, they've been waiting for a definitive sign of real progress, a tangible indication that their efforts will eventually bear fruit. Critics often dismiss Pi network as pointless, arguing that the tokens currently possess no inherent value and may never achieve significant worth. However, staunch supporters view it as a revolutionary approach to distributing digital currency, democratizing access to crypto assets, and empowering individuals worldwide. Ultimately, the future of Pi Network hinges on its ability to successfully transition from a closed, self-contained system to a fully open and integrated one. That's precisely why any news or developments regarding Pi tokens becoming available for trading or exchange is considered a monumental event. Such news would be a huge deal, potentially triggering widespread excitement and celebration among its millions of dedicated users. The fate of Pi Network, and the value of the tokens its users have diligently mined, rests on whether these digital IOUs will finally transform into real, tangible and tradable assets within the dynamic world of cryptocurrency exchanges. And that's where things get truly interesting as we delve deeper into the potential and the challenges that lie ahead for Pi Network. So, what exactly is a token unlock? It's a term you'll hear frequently in the crypto space, and understanding it is crucial for anyone involved in trading or investing in digital assets. It's actually pretty simple at its core. We're talking about a mechanism that controls the release of cryptocurrency tokens into the open market. Think of it like company stock but with a crypto twist. Similar to how early employees can't sell their stock options until a certain vesting date arrives. In crypto, a token unlock is when previously locked tokens are released, making them available for circulation. This means they can finally be traded, bought, or sold on cryptocurrency exchanges. These tokens often belong to founders of the project, early investors who provided initial funding, or are strategically set aside for community development initiatives and overall project growth. The lockup period ensures insiders stay committed and incentivized to work towards the project's long-term success and stability. When the unlock happens, those previously restricted tokens are released and can finally be traded or sold on the open market. This sudden increase in available tokens is a big deal. It can have a significant impact on the market. It's all about the fundamental economic principles of supply and demand. More tokens flooding the market usually translates to downward pressure on the token's price, potentially leading to a price decline, unless demand keeps up with the increased supply, which is a less common scenario. That's precisely why seasoned traders and investors meticulously watch unlock schedules closely. A big unlock event can create significant price swings and increased volatility, sometimes presenting a lucrative buying opportunity for savvy investors, and sometimes representing a considerable risk that needs careful evaluation. For Pi Network, the highly anticipated upcoming unlock could very well be the pivotal moment when speculation finally transforms into tangible market reality. The market's immediate reaction and subsequent trading patterns will ultimately set the tone and trajectory for what comes next for Pi. Therefore, understanding the dynamics of token unlocks is absolutely key to successfully navigating the complexities of what's about to unfold in the Pi Network ecosystem. Here's the headline: mark your calendars. In July 2025, a significant event is on the horizon for the Pi Network. Approximately 337 million Pi tokens are scheduled to be unlocked, representing a pivotal moment for the cryptocurrency and its dedicated community. This event marks the first major liquidity injection for Pi, a crucial step towards establishing its presence in the broader cryptocurrency market. It's a chance to see how the market responds to a substantial influx of tokens. This is a potentially game-changing event for early users and dedicated miners who have been actively involved in the Pi Network since its inception. Their patience and commitment are about to be tested. These are the individuals who diligently mined Pi through the mobile app and meticulously verified their accounts, contributing to the network's growth and security. These tokens aren't just numbers on a screen. They represent the efforts of real people from all corners of the globe, united by their belief in the Pi Network's vision. These are individuals who have successfully completed the Know Your Customer (KYC) process, a critical step in ensuring the network's integrity and compliance. And importantly, they've taken the necessary steps to migrate their Pi balances to the mainnet, paving the way for real-world transactions and utility. For years, the perceived value of Pi has been largely based on speculation and future potential. We've seen IOUs trading on less than reputable exchanges, but without the backing of actual circulating tokens. This unlock has the potential to finally establish a real-world price for Pi, determined by market forces and actual trading activity. Of course, this is all contingent on the successful launch of the Open Mainnet, a crucial milestone for the Pi Network's long-term viability. It represents a significant transition, moving Pi from a contained ecosystem within a mobile app to a fully fledged, tradable digital asset on the open market. Millions of miners and Pi enthusiasts are watching this development with bated breath, their eyes glued to their screens. The question on everyone's mind: will their accumulated Pi tokens finally translate into tangible value? The release of these 337 million tokens is just the first domino in what could be a series of significant events for the Pi Network. The key factor will be how effectively the market absorbs this initial wave of supply, and that will ultimately play a crucial role in shaping the long-term trajectory and overall future of Pi. Will Pi rise to become a major contender in the cryptocurrency space, or will it gradually fade into obscurity amidst fierce market competition? The answer to that question hinges on the events that unfold in the coming months, making this a truly pivotal moment for the network. This is, without a doubt, the moment of truth that will define the future of the Pi Network and its place in the digital asset landscape. The cryptocurrency world is watching, because everything for Pi changes from here on out. To predict Pi's future, let's look at other crypto projects during big unlocks. Usually, a large unlock leads to a price drop. More tokens hit the market, and some holders cash out. Coins like Solana and Avalanche saw price dips before and after major unlocks, as traders anticipated the extra supply. Sometimes prices recover quickly if the project is strong and the community is committed. If the market is bullish, the dip might be brief. Sometimes the event is already priced in and doesn't cause much drama. Pi's unlock is unique. Millions of regular users, not just insiders, will get access. Some may sell for quick profit, others may hold for the long term. The outcome is hard to predict, but history shows a sudden supply tests the strength of any crypto project. The community's conviction will be crucial. Will Pi holders panic, or will they hold? The answer will define Pi's next chapter. The big question, will everyone rush to sell their Pi? For many, even a few cents per token could mean real money, especially in developing countries. A mass sell-off could flood the market, driving prices down fast. This is the classic crypto bank run scenario. But there's another side. Pi has built a strong community focused on long-term use, not just quick profits. Many users see Pi as a stake in a future decentralized economy, not just a lottery ticket. The team has also encouraged holding by letting users lock up tokens for higher mining rates. Many have already committed to keeping their PI locked for years, reducing immediate selling pressure. So while a sell-off is possible, it's not guaranteed. The real outcome will be a tug-of-war between profit-takers and true believers. The initial days after the unlock will reveal which side wins. Pi's future depends on the choices its community makes. Will they cash out or hold on for something bigger? If you're watching Pi, keep an eye on a few key signals. First, watch the price action after the unlock. Does it crash or hold steady? Trading volume is just as important. High volume with falling prices means heavy selling, while high volume with stable prices means buyers are stepping in. Monitor official announcements from the Pi team. Clear updates and new partnerships can boost confidence. Silence or vague communication can fuel fear and selling. Check community sentiment on social media. Are people panicking or are they optimistic? Look for trends. Are users excited about using Pi, or just asking how to sell? These signals will help you gauge the market mood. The first days after the unlock will be volatile. Stay alert, and don't get caught up in the hype or fear. The data will tell the real story. Watch closely, and act wisely. Navigating a token unlock can be stressful, but don't panic. Emotional decisions rarely pay off. Stick to your plan. Decide in advance. Will you sell some Pi, hold it all, or split your strategy? Many choose to sell a small portion and hold the rest for long-term potential. Write down your plan and stick to it. Don't let price swings sway you. If you're thinking of buying Pi after the unlock, be patient. The first days are usually the most volatile. Waiting for stability can pay off. Consider dollar cost averaging. Invest a set amount at regular intervals to reduce risk. And remember, only invest what you can afford to lose. Pi's future is uncertain. It could soar or crash. Don't risk money you need for essentials. Stay smart, do your research, and keep your emotions in check. That's how you survive crypto volatility. What happens after the Pi unlock? There are a few possible paths. In the best-case scenario, sellers and buyers balance out, the price stabilizes, and Pi's ecosystem grows. Developers build apps, exchanges list Pi, and real-world use drives value. Pi becomes a true digital currency used by millions. In the worst case, a massive sell-off crashes the price, scaring off buyers and developers. The project loses momentum and Pi fades into obscurity. Most likely, reality lands somewhere in between. Initial volatility, a price dip, then stabilization. The long-term outcome depends on whether the team delivers real utility and keeps the community engaged. The next few months will be critical. Pi's fate isn't set. It will be shaped by what happens after the unlock. Watch closely and be ready for anything. The story is just beginning. The next chapter is up to the community. As the Pi unlock approaches, uncertainty is high. The release of 337 million tokens is a huge test for the project and its users. The outcome will be shaped by supply, demand, and community choices. Will people cash out or hold for the long term? The Pi team's lockup mechanisms encourage holding, but quick profits are tempting. If you're involved, stay cautious and do your own research. Watch price, volume, announcements, and sentiment.